Thank you, Tim. Morning, everybody. We're going to cover today very briefly an overview of CVCheck and Bright, the underlying businesses of CV1. More recently, we have announced capital raised in relation to the acquisition of Bright People Tech, and I'd like to go through the strategic rationale and quite why this is so strategic for us and what we see as the global potential of this. So we'll dive straight in. Next slide, please. So corporate overview, I'll leave people to consume that. It's available online on the ASX, moving right along. So CV1 Group, we operate up until now through an entity called CVCheck. We've been performing strongly, established on the ASX in late 2015, and after establishing the brand in our marketplace, we've set about turning it into a strong recurring business revenue focus so that we could end up with a very sustainable business and wide reach. Now that's played out very well. You can see in the charts here. And in this past half, we've produced a Q2 that was a record quarter of all time. The first half overall revenue of 7 million, which is a record for all time, and a record booked ARR, which is the revenues we've actually booked over a 12-month period ended 31 December of 10.2 million. Cash generation of $500,000. We've got a strong balance sheet at that point, and we've got strong tailwinds as we enter this second half of the financial year. Job ad series are up, government stimulus remains in place, and we're seeing absolutely huge numbers coming through our website. So strong position to enter into this transaction. Bright People Tech is a different take on what we do. In their case, what they have is, if you think of CVCheck in the verification part of the RegTech space, Bright are much more focused on the risk management and compliance part of the RegTech space. The company's been established for some time. They have commercial proof, and their focus is using verifications and credentials, the type of thing that CVCheck does, and leveraging that in a way that companies can better manage their workforces. Some highlights: last year revenues 4.9 million, 85% gross margin because it's a very SaaS oriented business. EBITDA 1.7 million, so also very strong there. And most importantly for us, a technology stack that has been reimagined, rebuilt, and reflects what we saw as something that we would either build or buy ourselves. So we're super excited to come across this company after a lot of search and put together this transaction. Next slide, please. I'd like to now talk a little bit more expansively about the strategic rationale and what we've seen from our customer base that meant for us that this was a must-do transaction and would accelerate us by years and also benefit Bright by years. So if we move to the next slide, essentially, as we all know, digital is part of everyday life. We all have these things. We use them for almost everything we do. And that's enabled these vast shifts in the way that workforces conduct the way they do things. We now have a person, say in the Philippines, is able to be a freelancer and come in and contribute to the Australian workforce. Gig economy workers, subcontractors, contractors, employees, vendor workforces. And this evolution of these workforces and the complexity that comes with trying to manage them has been unmatched by a change in the underlying trust systems that you use that underpin workforce management and enablement. What that's leading to is very much evolved customer needs. Employers now need to keep a really fine handle on their social license to operate. They need to better manage these increasingly complex workforces. They need to still ensure that their workforces are identified, have the right skills, and are safe to have on site. Meanwhile, they've got this new layer of complexity coming in through the need to manage risks such as industrial manslaughter, and deal with the risk management tools, which at the moment, until now, are really not there to be able to handle that kind of increased complexity and risk. Meanwhile, with privacy laws and data protection and all these other things, we've also got to ensure that individuals are empowered to be able to participate in that process actively by taking their data, digitalising it, sharing it, and viewing when it is being used. Now, this is really complex stuff. And what it means is the key issue that's not being addressed to solve the pain of that is credentials triggers. So a person's identity, their qualifications, and the proofs associated with lack of criminal history, violence, and all those sorts of things, so that a company can use those as triggers to view their workforce and report on it on real time and close emergent gaps in people's skills, ability to be on site, ensuring they have the right licenses and so on. So we've identified this as an emergent issue more than 3 or 4 years ago now, and have been looking to either build it or buy so that we can take a leap forward and address this market need. By doing this transaction, next slide please, what we will do is create a credentials-based workforce management capability. It will have a SaaS business model. It will bring the strengths of CVCheck and its knowledge of verification across a highly scaled customer base of 30,000 B2B customers, over 1 million individuals, and couple it with Bright's reimagined system, which takes the core data in screening and credentials information and uses it to drive out workforce compliance and the view of what's happening in the workplace. It fills a customer need, creates a unified credentials-based workforce management capability, positions the group strongly ahead of this evolution, which is very rapid in the way that digital credentials are being applied into our lives as workers, and gives CVCheck a stronger SaaS-based platform in which to go after this agenda, which is much more global in its scope. Total enterprise value of the transaction is about 15.3 mil, 12 million of which is scrip, and it's escrow for 2 years. If we can go to the next slide, I'll go through a little more about what we mean in this credentials-based workforce management capability. At present, on the column where we look at background screening, CVCheck is very strong here. And you can see the types of checks that we do, which help build a picture about a candidate, which can form the foundation of trust as they come into a workforce. Thereafter, they need to be inducted. They need to be shown things about sites that are safety related, things that they can and can't do, what are the danger points. They need training on those sites. All these things can be tracked and coupled with the credentials and add to the information that you have. The person, once they're inducted and onboarded, can then be issued with access controls and tracking, so that when they get deployed to a site, you know where they are, that they're in the right areas, and that can be reported on in real time. Any of the lapses in credentials, people will know ahead of time that there's a gap coming up and that needs to be renewed. So what we're doing is we're extending from background screening that CVCheck's very strong in into management of workforces and using SaaS-based license fees to give companies the solutions they need to see in real time across their whole complex workforce what they need to manage as risks, and giving them tools so they can do that easily. Next slide, please. Additional to that, when CVCheck works, we look to how can we leverage a transaction. In the case of Bright, they have about 40 blue chip clients. When we look to CVCheck's customer base and cross map, we're looking at about 410. I don't think I need to say more about what the potential leverage is when we consider that Bright's revenues last year were about 4.9 million, half of which were SaaS revenues. We see immediate uptake amongst our client base. We just have to roll it into them. Next slide, please. Pro forma P&L, this is reflective of the COVID year. Everybody knows about what happened last year with the shutdown of the economy in the final quarter. Both of our firms were affected by that, but you can see that despite that, our customer bases and revenues are such good quality, we maintained our revenue flow and we maintain our gross profit margin. So when we bring the two together and we look forward to what's happening this year, it's quite exciting in the near term, and there will be catalysts that people can see financially. Next slide, please. Key transaction terms. I really just want to focus on one element here, and that's the Bright team. We're bringing them with us. This is structured to be more like a merger than it is an acquisition, and there's a lot of skills there, high caliber skills in that domain that we need with us alongside. They're great people to work with, and they'll also be very strong with us as shareholders. Next slide, please. So just recapping, the fast-paced digital change leads to complex workforce management needs and a need to empower individuals to participate in this credentials-based management system. The transaction combines the two companies in a way that creates that capability. We shift to a greater SaaS proportion of revenue. It adds scale to CV1 Group, pro forma revenue 17.3. We get some great commercial proof through these blue chip customers, and following the recent capital raise of 10.5 million, we're very well capitalised to go after this agenda. Next slide. Finally, some information on the integration. So this is available for people to consume on the ASX, but basically the types of things that you would expect. Focus on customer, what engineering is needed to support that, and then international expansion. Next slide. We expect this to close after a shareholder vote in April. So we're already working on bringing the companies together in the way that they work and think, and putting the pedal down to get things going in the final quarter of this year. And that's pretty much it. So CV1 Group now operating with CVCheck and Untitled as its core focus brands. I'd like to open up for Q&A, please.
Thanks, Rod. Just a question you touched on overseas. So there's a question here: how does the new merged company position itself as a global offering, or is the focus just Australia at the moment?
At this stage, we've got to integrate the two entities on Australia and New Zealand customer bases. And then from there, we need to take this credentials-based engine for workflow management out to the globe. Now, there's a lot of companies of CVCheck's ilk in the global arena, but we also have a very large number of multinationals who have interest in this now. So we need to go about that in the right way. It's a very big opportunity. We're going to prepare well. We've got the resourcing to do so. So that'll take us a little longer, but it's certainly a key thing that we'll be looking to by the time we get to the end of the year, calendar year.
And is M&A part of your strategy moving forward? Is M&A based on technology or revenue or client base, or a combination of all?
Combination of all of those things. I think, if we take the example of Bright, CVCheck have been very selective in looking around. We telegraphed that we had moved on to that stance as a board a couple of years ago, and our first transaction is a very important one. You can see how strategic we are in our intent and also the types of things we're looking for.
And is there a further kind of technology build do these stay kind of isolated assets, if you like?
Not really, no. There is amalgamation of elements of them, and then there's the objective is to decouple and go after this credentials-based engine, which we can then hook up with other technology stacks. And that's one of the key engineering objectives, but it will always be, in our case, customer-led. Our job as a company with shareholders is to produce value creation and stand on our own 2 feet. We will always have financial and customer focus in mind first. Technology will follow that.